Hello folks, this is Naeem Azam, Chief Market Analyst at AvaTrade. Welcome to our weekly webinar, and in our masterclass today we are going to discuss how to trade indices. This is one of the most popular webinar among our investors and traders, and for that reason I am going to have another series of this webinar not next week but the week after as well, because we are getting a huge amount of demand on this particular topic. And of course, given what is happening in the market, and especially with respect to the earnings season, I think it is quite important for us to continue to update you on a weekly basis, pretty much, or on a fortnightly weekly basis, to show you where the markets are really trading. So with that in mind, look, thank you so much, folks, once again for taking the time out. I am very thankful for you guys to join, because this is your opportunity to ask me as many questions as you can while as we go ahead, and also learn how to trade indices, because indices is the one of the most important way to get exposure to a large number of stocks by deploying a very small capital. Right, so in a series of 3 questions, let me begin with the first question and ask you guys this: that how many of you have traded, actually attended any of my previous webinars? So please say yes if you have. I see some lot of familiar names coming up once again. Okay, that is really good to know. And of course, some new names are there as well. Look, thank you so much for those of you who are there. So bear with me as always for the first 5 minutes as I continue to follow the routine, which is very important. So the second important question is, please say yes if you've been trading for under a year. There you go. So a large number of traders once again are there who've been trading for a year. So that means that these guys, these traders are new to the game of trading. They are learning. They are very much at the beginner to the intermediate level. So this will help me to break down the information to a point where you guys can really understand where to how to make sense of the economic numbers and what to do about it. Okay, now the second question and the final question: how many of you, please say yes if you've been trading over 2 years? All right, great, thank you. So not many people who are there for over a year. Thank you, Sid. I see you sending the messages over here. Sid R, thank you for that. And I hope all is well with you as well. Okay, so folks, as always, I have to go through this slide. Again, another part of our housekeeping, which is important. So anything which we'll be discussing in this particular webinar cannot be perceived as an advice. If you are seeking for one, please do consider consulting with your own financial advisors. What a day today it is. I'm seeing everything green with respect to the US futures. Very, very positive. Very exciting webinar ahead. We will discuss everything in a bit. But before that, as always, please understand the importance of Twitter. I cannot emphasize this point more, because the Twitter is one of the most important source of information in terms of a breaking news, especially if you are trading. And what doesn't matter whether you are trading equities, Forex, commodities, fixed income, whatever you are trading, the first time and most likely the information that you're going to get in the most fastest way, it is through Twitter. And if you are trading euro dollar, sterling dollar, Japanese yen, or anything, or whether it is S&P 500, Nasdaq, Dow, or the European indices like FTSE 100, DAX, Stocks 50, CAC, whatever it is, or whether it is oil or gold. You know, the first time, the most let's say the most rapid form of information that you are going to get is really your Twitter. So folks, please do get involved on Twitter. My handle is right in front of you, and AvaTrade's handle. So please get engaged in conversation. Ask me on Twitter whatever you like, and then I'll be very happy to answer you guys back with your queries, whatever you have, as soon as possible. Get engaged in a very interesting conversation that I initiate on a daily basis on my Twitter, on Twitter. So it is very important, and of course I will show you how to find that and how to really get the accounts up in a minute. But the other thing which is also quite important is a YouTube. On AvaTrade's YouTube, I've produced 2 videos on a daily basis. One of them is very, very interesting for those traders who are newbies to this system, who are trading under 1 year or so, because the information is broken to a very elementary level. We discuss fundamentals, which really drive the markets on a daily basis. And for those traders who've been trading for a while, we also have technical analysis part there as well. So we really discuss various different levels in the market and what are the importance of those markets, and all of that kind of stuff with relation to that. Thank you, Sid, for that. Some people are just saying that yes, they are already falling. I appreciate that. Right, okay, so let me now quickly go through Twitter and then some of the other accounts to show you. So here is a Twitter account. You can see very important information was released earlier about Goldman Sachs. The second quarter revenue came. The stock is up 4% in pre-trading, folks. 4%. That is a huge move. What an opportunity we had last week when Goldman Sachs and JP Morgan were trading really down. I remember JP Morgan was trading at $91 at the time. I wanted to increase my position in JP Morgan from my own personal perspective, but I didn't. The reason was that it's just too volatile. But now I think any pullback in a banking stock, because we still have a number of other stocks, Citigroup and other few banking stocks to come up with the earnings, and of course the tech earnings will also start to roll out. So any pullback in the banking stock could be a really good opportunity. So I'm going to be really looking to increase those positions in my own portfolio with respect to JP Morgan, Goldman Sachs, and of course Bank of America will also be coming out with its earnings report very soon as well. So these are very, very solid companies in my perspective. So again, all that information, you can get it over here, and then AvaTrade's account is right in front of you as well. Please make sure that when you are following, you are following the Twitter account. The verified sign is there as well. So this is the next one is your AvaTrade's YouTube channel, as you can see in front of you guys. So this is where the daily analysis and everything else with respect to that is also uploaded on a daily basis again. Right, now let's return back to our agenda and then see what exactly it is on the menu for us today before we as we continue forward. So with respect to markets, what we will be discussing is that, okay, why to trade indices, the inverse of indices, the fund flow, defining levels and defining a strategy. That is exactly what we'll be discussing. And of course, we will be looking at the market's price action, what exactly is going on with there, and then how the markets will perform. Okay, sorry. I don't know what happened. We started to cut off over there. So, but we are back here, right? So, okay, why to trade indices? Again, folks, the reason Yeah, just a Donald Trump's tweet just came out. It says 96% approval rating of President Trump in the Republican Party. Thank you. So Donald Trump just tweeting that. So let me just actually retweet it so that you guys also get that notification as well. So this is what I do. You know, I will really follow main accounts and then give you retweet some of them with and that sort of information is important from market's perspective. So again, going back to the why to trade indices, the reason that we wanted to trade indices is because now we have a Bank of America, we have a JP Morgan, we have Bank of New York Mellon, we have Goldman Sachs, so many banking stocks coming up with their earnings this week, and then we'll have a tech stocks coming up with their own earnings as well, and then we have material sectors, so many different sectors. So first, if you have 500 to 1,000 to a 10,000 or a 50,000 dollar value of a stock of an account, you can only invest so much, given the fact that Tesla stock is like $1,400 a share. You know, so what would you do? I mean, rather would you just have an exposure to one particular stock or Goldman Sachs in this case, where each stock will cost you about £220 or $220, or whether you will just buy an index where you get a much better exposure across a spectrum of various different stocks, of course. And more importantly, you know, we're also getting earnings. This is the earnings season. We're getting earnings from airline sector as well. Delta came out with its earning yesterday. Numbers were very feeble, but again, we have American Airlines and Boeing and all of that will be coming with their own earnings next week. Again, you cannot, unless you have a huge portfolio of over 10,000 or 30,000 or 50,000, it is quite difficult for retail investors to have an exposure to all of those stocks. And if you even do, then the gain's not going to be that much, because you know $220 is only going to get you one stock for Goldman Sachs, and $100 is only going to get you one stock for JP Morgan. So you know, if your account is only $500 to $1,000 to a 10,000, so you can imagine that you can't really hold back 100 shares or something like that within the same area. So then what you do is you go for the indices like Dow Jones Index, where you can trade on a small, you can have an exposure to a wide spectrum of stocks with a smaller amount. But again, indices are very, very volatile, so this is something that you want to consider very carefully before you do that, because Dow Jones futures, they are already up there, indicating a very strong open today, and they are up over 300 points. The S&P futures are up over 45 points. Again, that's a nearly 1.5% increase on that front. And then yesterday we had a 500 points. So you wanted to keep your stop losses very, very carefully and your position very carefully. Again, we will discuss everything in a bit. The second is the inverse of indices. This is slightly beyond the scope, given what the crowd that we have right now, because not many people have, are at an advanced level. So I'm going to kind of skip this particular avenue. And then the next one is the fund flow. The fund flow is something that we discuss on a regular basis, pretty much every single week on our analysis, where we go and we talk about that, okay, whether hedge funds have increased their positions or whether the hedge funds have decreased their positions. It is quite important. So someone is asking what are the Twitter account details. So okay, let me just bring out the page once more. So keep an eye here. Here is the Twitter account details. Take a screenshot, or as always, remember that these webinars are recorded and they will be on our YouTube channel again, where I've shown you, so you can go back and watch these webinars again. Okay, so fund flow really shows that whether institutions are really buying into it or whether institutions are not buying them. Currently, what I can share that with you is that institutions, hedge funds are on the back foot. They are really consistently going wrong in the stock market. They didn't believe in the stock market rally at all, and they had very high short positions on the S&P 500 index. But now, for the last 2 weeks or so, they have been scaling back. Now those short positions are at the lowest levels as compared to the last few weeks. So that means that retail investors are really winning this stock market rally, and things are improving for them. Now, well, let's go to the Mt4 platform. Again, this platform can be downloaded from our web for AvaTrade's website or any other website that you could possibly prefer. Right. So the Dow Jones Index, the DJ30, this is where we are going to begin things with, right? So we are going to look at the daily chart first of all, and as always, green is going to be your 200-day simple moving average, then followed by your 100-day simple moving average, then your 50-day moving average. How do you put these averages? Put insert, indicator, moving average right over here, or trend, and then moving average. Go over here. This is your period, this is your color, this is the width of it, and then this is the methods. We wanted to keep it simple. Right. Now, when we change the time frame and go into a weekly time frame, these moving averages, now ignore these because, you know, this is something that Mt4 guys really need to fix this because they don't really change the positions. So, but the concept remains the same. The green is your 200. Now, rather than daily, this becomes your weekly because we are on a weekly time frame. We don't have to go back into the settings to change into daily to setting. System does it automatically for us. This becomes your 100-week moving average, and this becomes your 50-week moving average. Now, why I am so optimistic about this rally and so happy to see one particular bullish sign in this rally is that, look at this, guys. For the last 4 weeks, I have been talking about this, that look, over here the price had a battle with 150 moving average. It lost. We had another loss over here. The third week we were coming close to the 50-week 100-week moving average. Then last week we kind of won the battle against the 100-week moving average. And now this week we have declared a massive victory. Why? Because we are above the 50-week moving average. This is very bullish for the coronavirus stock market rally. This means that the coronavirus stock market rally is likely to continue its momentum to the upside. We are likely to target the all-time highs. We are likely to continue to make all-time highs from here onwards, as long as the price stays above these three important moving averages. These three important averages, once again, are your 200-week, followed by your 100-week, and then your 50-week moving averages. If this continues this way, then all-time highs is the least that we are going to expect. I think it is highly likely for these prices to go and give us a new stellar rally that the market had been waiting for a very, very long time. And remember, the Dow Jones Index was one of the weakest index among the other two US indices. The other two indices are S&P 500 and the NASDAQ. Why I am saying that? Because look at the S&P 500. S&P 500 crossed above these averages long time ago. NASDAQ was, you know, it's doing its own thing. It's going into a very event well above that. But now we are seeing some sort of a weakness coming for the tech stock. So the weakness in the tech stock and the continuation of rally in the Dow Jones and in the S&P really shows that the rally the stock market rally has changed its shape. Now it is not only about tech stocks, it is actually about the full 12 sectors of the economy, right? Material, energy, airline, leisure, all of them, retail, you know, so we're seeing improvement in all of those stocks. So this is important. This is quite interesting. But for the time being, for the last few weeks, what we had only NASDAQ really putting its trade to the upside, continuously moving to the upside, and that is not what we have now. But again, I just wanted to make sure that you guys understand when I say that the Dow Jones was the weakest index, because Dow Jones has only crossed these three moving averages now, as compared to the S&P, which did long time ago, and the Nasdaq did well before that. Now, when we move into European indices and look at the S&P, the FTSE 100, we are still very much in a consolidation zone. Yes, the momentum is back for the FTSE 100 index, but we are still well below the important moving averages on the weekly time frame. Now, if we look at the DAX 30, again, the DAX 30 is very similar to the S&P 500 index because we are away from all the moving averages, which is, again, it sends a very bullish sort of a signal for especially for the DAX index, because DAX is the strongest index among the European indices. The European indices are your CAC, your FTSE MIB, your DAX, your Stock 600, Stocks 50, and FTSE 100 index, right? So the DAX index is certainly a much better bet if you are looking to the upside. Similarly, the Dow Jones has gained a lot more better momentum as compared to the Nasdaq index, because the Nasdaq index is retracing some of its gains. Yes, we could see some sort of a retracement. Yes, we could see the price, the good entry price with respect to the Nasdaq. I don't think we're gonna get here anytime soon, but the good potential entry point is near its 50-week moving average. That is between 8,500 to 8,700 approximately. Similarly, for the S&P 500 index, the good price in terms of an entry was still 2,980 to 3,000 level, and the price has entered near its near its major resistance level. Again, this resistance level where we are right now, we didn't see this sort of a resistance since early May, because it was back in June. It was back in June that we were in these levels. So now the price has entered into this resistance zone. I do not think this resistance zone is going to work. I think the next resistance zone, which is likely to work, is going to be the all-time high, which is 3,328 to 3,396. Of course, we can narrow these points by going into daily time frame and then looking at the price a little bit more, more closely. When we do that, let me just make a little bit more minimal. So this is the area that I'm really looking at in terms of the next resistance, right? So in order to improve that, I think this area of consolidation is a pretty good bet for the S&P. So the next level of resistance, once we clear this, is really going to be in between this. The support level, another important support level, I love to see the S&P 500 dropping over here, never happened. But regardless, now the chances of that happening have gone even more lower. But I think the next and the immediate support level, if the market starts to dwindle as the earnings season continues to unfold, then I think it is this level of support which we can see. And again, this is going to be above the 50-day moving average. So it's going to be between 3,100 to 3,123. That is sort of a level that we see. Otherwise, the breakout trade from here. But make sure that the stop losses are very, very tight, and also your positions are small, because now the market is going into a different territory, that we don't have the really good entry point with respect to the Dow Jones. The good entry point was the moment that we broke above and had a close. So that close is really happening this particular week. But obviously the price has moved well away from its 50-week moving average. But if we look at the daily time frame, you really wanted to keep your stop losses in around your 200-day moving average if you are looking for a trade to the upside and then a continuation of this rally. And even then, this is a pretty big stop loss, and you wanted to reduce your positions accordingly, because if the price drops below the 200-day moving average, then that means another continuation of this downward trend. Remember, we pierced the 50-day moving average in June, and after that we had another two piercing of the 50-day moving average, false breakout to the downside. But now the prices are moving to the upside. This resistance, in my mind, or in my opinion, doesn't really carry much of a value. The price may just have a little bit of a, some sort of a pause, but nothing major. I think that the major resistance for the Dow Jones remains at its all-time highs. So when it comes to the indices, we are really talking about all-time highs, targeting those all-time high levels, because this is very, very positive. So even now, looking at this price action, this is the area where we are really looking at. Now, let me quickly have a look at questions, because I'm sure that you guys must have popped a lot of questions here. Go through some of them. Okay, so someone is asking why AvaTrade shows indices future and not the actual indices. Because you are trading margin. When you are trading on a margin, then it's it's mainly that. But it is something that you wanted to discuss with your client managers, because you can trade index on a margin as well. But I think I don't know the exact answer to that, because I'm not in the in the operational part of the system, just to mention that. Okay. What is the best way to get started on Forex trading? This is not about a Forex, Samir, so sorry, can't really answer that. Off topic. Do you trade weekly? Yes, I look at the weekly chart every day, and I trade off the daily chart. That's what I do. Which time frame moving averages are we using? So which time frame? Okay, so someone is asking about the moving averages time frame. So moving averages time frame, the most important one is your weekly chart, as I showed you before. This one, but on the daily chart, they are right in front of you as well. So this is again, this is one of the wonders of Mt4. This is why I really hate this platform, to be honest with you, but we don't have much other choice. So this is your 50-day, this is your 100-day, and green is really your 200-day moving average. They are all simple moving averages. Similarly, the moment that we change into weekly, the green, which was 200-day on a daily, becomes 200 week. 100, which was daily on a daily time frame, becomes your weekly, and this becomes your 50 week, right? So again, these tags are not really moving, which is very annoying from Mt4 time perspective, the platform perspective. That's pretty much about that. So please, more questions. What is the MA for H1? For hour one, for an hourly time frame, so then you're really looking at the hourly time frame. So this becomes your 60-minute average, 50 for that. So, but really the moving averages, when we are talking about, the more importance that they have is on a daily and weekly time frame. Anything below that, the moving averages don't really have too much of a power in terms of measuring the strength of the time frame, or measuring the strength of the trend, whether it is an uptrend or whether it is a downtrend. So when we measure the strength, really look at weekly and daily time frame from that perspective. And on any shorter time frame, you really kind of wanted to look at the support and resistance levels, and then look from their perspective and from there onwards. But we mainly try to reduce risk by looking at the daily and weekly time frame. Yes, we won't get too much of a trading opportunities, but we will get quality trades, and the chances of getting wrong any of them are very small as well, because we don't trade that often. and we trade at much better levels. One can enter the Dow Jones when it has already crossed. Okay, so someone again, there's a question: how do you think one can enter the Dow Jones index when it has already crossed the moving average? So once again, what I was really saying was that right now the opportunity is, if you already have a position, that is great. If you wanted to, if one is thinking of entering into Dow Jones now, so the stop loss is quite far. Even if you do it, then you really wanted to keep the stop loss very close to this today's candle, so the low of today, because if the price starts to close below the low of today, that should be the stop loss. Otherwise, reduce the position to a level where the stop loss is within your comfortable position. So for example, if you can afford $500 in terms of a stop loss on your position, then make sure that when you are putting your position in for the DAX, then that is very much gone into that period. So basically what I'm trying to say is that if you can afford $200 stop loss, then make sure that you reduce your position size accordingly. Don't just have that, yeah, all the time I'm gonna have a one lot, or I'm gonna have a half a lot, or a 0.2 of a lot. So make sure that you adjust your lots for indices according to your according to your risk. So whatever the risk that is that you have decided for your portfolio, whether it's 500, 5,000 or 50,000 that you can afford to lose, so adjust your positions accordingly. What is the best indicator in your opinion for M2 or 30? Okay. So the best indicators for M2 and M30, any of that, is really the price action, folks. So let's say if we go into here, right? First of all, you wanted to kind of look at the gaps, you wanted to look at the price action, you wanted to look at where the consolidation is in terms of a price, and then form your support and resistance levels. If you're looking at the Dow Jones 30, you wanted to have a look at, okay, you want to wait for the opportunity for the price to come into this level. This is a better level, right? But then we also have another better level, which is before that. And that level is just around over here. So if you don't think that, when the price comes over here and the price starts to become a little bit weak, then you may not want to enter that level, and you may want to enter it at a better level. Similarly, if the price starts to show even more weakness, then you wanted to look at the next support level, and that next support level is going to be here. But keep an eye on the RSI. I think RSI is quite good as well, with that overbought or oversold levels can really help with that respective. So should one, okay, folks, I think this is it pretty much. I will call the day over here. And thank you so much, as always, for attending the webinar, and I will see you guys next week. Enjoy your week until then.